everybody. Can everyone hear me?
Yep.
Okay, great. I think we're going to get started. We just have a few people, but I have a feeling that people will just be joining a few minutes late. Welcome to you all. Thank you so much for being here with the January Neighborhood Health Series. We have had the privilege of working with Clark County Credit Union for many years now, who have been an amazing sponsor and really underwritten all the costs of this series and enabled us to do an in-person series when we were able to do those, provide a really nice dinner for all of our guests and an opportunity for all of our guests to learn and be inspired and get to know one another. So it only seems fitting that after years of sponsoring this series that our sponsor actually gets to be the speaker. So I'm very, very, very happy to have them here tonight. And many of you have met Craig Fraley through the years. He's often been with me in the beginning and presenting a little bit about Clark County Credit Union. And today I have the pleasure of introducing another one of Clark County Credit Union's incredible people, and that is Crystal Price. With over 18 years in the financial services industry, Crystal's developed a passion for community while holding various roles within financial institutions, such as financial service officer, mortgage lending officer, public relations, and community outreach. Additionally, she has held several various volunteer positions for local nonprofits, credit union organizations, and local school groups. A Las Vegas native, she is passionate about educating the community about finances. Certainly everyone is always thinking about their finances, and this is a very relevant topic right now. So it is my pleasure to welcome Crystal Price. I am recording this presentation and we will be posting this to speakers.roseman.edu. You're always welcome to go to that website and check and see past presentations as well as future presentations when they're scheduled. And with that, I'm going to turn it over to Crystal.
Thank you, Vanessa. Thank you, Roseman, for inviting both myself and Craig tonight to present to you Solving the Mystery of Credit Reports. Like Vanessa said, my name is Crystal Price. I'm the current Director of Marketing for Clark County Credit Union. Me and Craig are happy to present this to you. I'm going to let Craig go ahead and start us off.
Good evening, everybody. Craig Fraley here, Director of Business Development for Clark County Credit Union, with him 28 years now. And tonight we are going to remove all of the mystery surrounding your credit reports and your credit scores. Before we're done tonight, you will know what goes into making up your credit score, how can you protect your credit score, how can you improve it, what happens if you find an inaccuracy on your credit report, or if you become a victim of identity theft, how does this pertain to your credit and what can you do? We're going to cover even more than that, but if you have any questions tonight, please, I believe you have a chat box you can use. Please submit them in the chat. We will address the questions at the end, keeping in mind that a lot of your questions will probably be answered during the course of this presentation tonight. And let's go to slide 2. There are 3 major credit bureaus in the United States: Equifax, Experian, and TransUnion. Almost every single adult in the United States has a file with at least one, if not all 3 of these credit bureaus. They gather information from you in a variety of ways. They get it from banks, from credit unions, from retail establishments. They also search court records and they get information such as bankruptcies and liens and judgments against you. They compile all this credit and public data and they put it together in one place, and this becomes your credit report. And then they share this information with people who have a right to know. And that is people you have given permission to look at your credit. Now, not all creditors report to their credit bureaus, and not all creditors report to all 3 of the credit bureaus. So it's nice if you, when you pull your credit reports, you want to pull from all 3 bureaus and you can see who's reporting to who. And if somebody's not reporting credit to one of the credit bureaus, you can ask them to do so because this helps build your credit. And now the credit bureaus are regulated by the Consumer Financial Protection Bureau. We'll go to the next slide. And they have to abide by the Fair Credit Reporting Act. This law was designed to promote accuracy, fairness, and privacy of information for every file on every consumer. You can access your own file, and you're encouraged to do this once every year. You can get a free copy of your credit report. And it's important that you do that. And what you're looking for is to make sure all the information on your credit report is yours and that there's no inaccuracies. Oh, by the way, tonight, you're going to hear some things more than once because it overlaps in categories, and it's very important for the health of your credit report. Now, you can dispute inaccuracies on your credit report. So let's say you get your credit report. We're going to pick on Kohl's tonight, just as an example. You have a charge account with Kohl's, and they're reporting that you're 30 days delinquent, and they're reporting that on your credit report. But you have a statement showing that you're not delinquent. In fact, that loan's paid off. You can dispute that. You contact the credit bureau, you let them know that this account has been paid, it's current, and you provide them a copy of the information you have from Kohl's. The credit bureaus must investigate this, usually within 30 days. They will then contact the original source. In this case, it would be Kohl's. Kohl's will do an internal investigation, and they'll see, oh yeah, that account is paid, that was reported inaccurately. Now the credit bureau has just verified that there is inaccurate information on your credit report. They must remove it. They also must notify you that they did so in writing. Also, outdated information must be removed from your credit report. This pertains primarily to negative information. You want positive information to stay on your credit report indefinitely, and it will. But if you have negative information, there's a time frame that will stay on there, usually 7 years. We'll go over some of the exceptions later. But in 7 years, like if you have collections, late payments, those things, bankruptcy, that's going to show for 7 years, and then it's going to fall off. But let's say you're looking at your credit report and you had some late payments, and it was year 2000, and the credit bureaus just didn't remove it. You need to contact the credit bureaus, and they will remove any negative information that's outdated. However, they will not remove any accurate negative information that is not outdated. The address to your file is limited. So you can pull your own credit report, and that's fine. You do that once a year for free. And anybody you give permission to look at your credit. Your neighbor can't pull your credit report. A family member can't pull it. Somebody just being nosy can't pull and look at your credit. You have to give somebody permission. So if you apply for a loan, of course, you're getting them permission, they're going to pull your credit. And in some cases, some employers want to look at your credit. You'll sign a waiver giving them permission to do so. Same for landlords. Sometimes when you're renting, they want to look at your credit. Again, you're going to sign a waiver for that. You must be told if information is used against you. For example, you apply for a loan and the bank denies you. They must give you the name, the address, and the phone number of the credit bureaus they use to deny you for that loan. Same holds true if you're applying for a job, you're denied. You're applying for insurance and you're denied. You're applying for a place to live and you're denied. Anybody who uses credit to make a judgment against you must tell you which credit bureaus they used. You can then contact the credit bureaus and you can get a list of the people who most recently pulled your credit, which is a good way to make sure that the people that are pulling it are the people you've given permission to do so. And with the next slide, we are going to go over to Crystal.
Yes, and I just want to add to what Craig said about getting a letter when you've been denied credit. When you are denied for a loan, the lender will also always give you the reasons that the loan was denied. This can be really helpful so that you know what to fix, what to change on that credit report, so that hopefully you can apply again in the future. So now on this slide, what we're going to talk about is obtaining your credit report. Like Craig said, there are three main credit bureaus: Experian, Equifax, and TransUnion. You can gather your credit report from either contacting them directly, and the addresses and information for each of those credit bureaus are in the handouts that Vanessa sent out to you guys earlier this week. I believe it was on Tuesday. So you can have that information there. Or you can use a centralized service, someplace like the annualcreditreport.com. And what they will do for free is pull all three credit reports so that you can access those. It's really important to make sure that you are viewing your credit report once per year to make sure that everything on the report is accurate. Like Craig mentioned, like all those steps in there, making sure the length of time that it was opened, balances, things like that are all accurate. You want to make sure that you're checking it, and so that if there are inaccuracies, you can report them as soon as possible to avoid hurting your credit score, because the longer a negative item is on your credit, the more points you will lose on your credit report. And then also, again, through the credit bureaus, if you do contact them directly, you can also obtain one free one per year. Next slide. So now we're going to talk about the sections of the credit report. Now, each of the three credit bureaus, they will look a little bit different from one another where they organize things, but each of them will have these four main categories. So the first one is the identification. So your name, your date of birth, your social security number, and your address. This is something that I think a lot of times people might overlook, but really it shouldn't be, specifically your address. Things like having the wrong address on file or an old address on file can affect your current credit decision making when you're trying to apply for a loan. I know I've had that myself where I was reported at an address that I lived at like 10 years ago, but luckily I was able to catch it, so I was able to update it with that one specific credit bureau. Two of them had it correctly and one of them didn't have the right address. So you want to make sure you have the right address, especially if you are looking to rent or to buy a home. A lot of times they want to know how long you've been at your address. So if there's a discrepancy, you'll need to make a statement of what's going on and why there's accurate information on a credit report. The next item is public records. Those include bankruptcies, judgments, and liens. So those are anything that have been declared through the court systems that you owe money. Sometimes those can report as a monthly full balance that is owed. Those with bankruptcies, they can show whether it's an ongoing bankruptcy, so whether it's still in process. So Chapter 13, something where it's like a repayment plan, those will show as open bankruptcies. A Chapter 7, it can say whether or not the 7 has, whether it's been dismissed or granted. Judgments, they will say the same thing, whether or not it's like a full amount owed or whether you're making monthly payments. Are those payments on time? Same goes for liens. So you want to make sure that that information is correct. If you actually do have any of those items on there, make sure that it's reporting correctly so that your credit report, your credit score is going to reflect an accurate score for you. And then the next section are accounts, also known as trade lines. Those are your auto loans, your credit cards, your personal loans, things like that. It shows your and your dates that the accounts were opened. This is another one that you really want to pay close attention to, making sure that if you've had a credit card open, say for 10 years, you're getting a full 10-year history on that and not 10 months, because the longer that you have an open item and on-time payments, the better your credit scores will be. Payment history, making sure that you have on-time payments. One thing that I've learned working in the financial industry, when you pull a credit report, there's a dedicated section on there that shows how many 30 days, 60 days, 90 days a person has. So you want to make sure that your payment history is current and up to date. If you have a payment that's reflecting past due, but like Craig said, you have a statement that shows that you're on time, you want to contact that credit bureau and get it updated as soon as possible before it affects your credit negatively. And then the last section is inquiries. And those are when you go into a Kohl's or an Ulta or any of these retail stores and you're just trying to pick your purchase, and maybe they ask you, hey, do you want to get a discount on something? And you'll say 15% on your purchase today. Or even if you're getting a mortgage or an auto loan, anytime that a credit report is pulled, that's going to show up on your credit report and affect your credit score. One thing, this also will affect the score positively or negatively. Negatively, it would affect it if you are, like I said, getting that 15% discount on something and you go to the next store and you do the same. It's like you're eager for credit. So you want to be careful that if you have not set out to go and apply for that Kohl's card or that Sears card, whatever it may be, that you're not applying for it just to get the discount that day, because in the long run, it is affecting your score. Things like an auto loan or a mortgage, there's a little bit more leeway because they know people are shopping. So if you're buying an auto loan, typically within a 2-week span, inquiries for an auto loan. So if somebody were to pull it up, it makes sense because somebody is typically looking for the best deal, right? What's the best interest rate? What's the best financing that I can find for this large purchase that I want to do? So those things make sense. But when you're going and applying for this credit card and this charge card, that can hurt your score. Out of these 4, there is one of the items, and I'm just going to have you think to yourself, there's one of these that is not counted against your credit score. So it's either inquiries, accounts, public records, or identification. And I kind of mentioned this going through that inquiries can affect your score, accounts, payment history can affect your score, public records, bankruptcies, and judgments can affect your score. The one thing that cannot affect your score is your identification. However, like I mentioned with the address, it can raise some questions. So you still want to make sure that that information is up to date. Next slide, please. Now we're going to talk a little bit deeper about trade lines. Like I said, these are your monthly payments. Trade lines will include all of this information, so your creditor name and your partial account number. This makes it easy. I know if any of you have accounts with the credit union, a lot of times you will have one credit, one account number and a separate suffix. So those numbers will be slightly different. So you just want to make sure that all of those are being reported accurately. The date that the account was opened, again, the longer that you have an account open, the better your score, because you can get more history on that. You want to look at your payment history. Payment history is recorded, whether it's on time, if it's delinquent, or if it's been charged off. On time, there's no questions on that. A lender can see that you've taken on this responsibility and you're making your payments on time. If there are things that are delinquent or especially charged off, I know typically a credit union will give you that opportunity to kind of explain, what's going on, but sometimes, depending on the lender, they won't even give you that opportunity to explain. Sometimes in the credit union world, we've heard, maybe 5 months ago, my dad was in the hospital and we had to do this and that, and it caused a strain on our expenses. And so that was why we were delinquent. Even though that's a negative ding on the credit, as far as your scores go, a lot of times credit unions are willing to listen to those stories and kind of hear why it is, but you still want to make sure that it is accurate, because and that there is an inaccurate item put on your credit report. You also want to check out the date of last activity. So this is showing that your monthly payment has been paid on time as of, say, this month, January. Sometimes if you deal with a smaller lender, they may not report as often as a major lender, say like a credit union or a bank would report. So you want to make sure that the history that's on file isn't something from, say, October, where here we are in January. You're not getting that credit for the months of October, November, December, and January. So making sure that the date last activity is current is also very important. And then you also want to check out your current balances, make sure that those match your current statements. If an account is joint or an individual account, that can also be seen on a credit report. If you co-sign for something, or even if you're as a joint owner on an account, those will show up as well. The way it works is when somebody pulls your credit, if you are a joint on that, and let's just say you co-signed for a child or somebody in your family, even though they are the ones that are making the payment, you are equally responsible for that, and that still affects your debt to income ratio on your credit. So you want to make sure that that information is correct. If you started off a loan as a joint, but then down the line you got, that with the loan was refinanced and now you're no longer on it, make sure that it's no longer showing up on your credit reports. And then current status, it'll show whether the loan is current and up to date or whether it's past due. We went over that a little bit, and your credit limits. This one can really affect you if this amount is reported inaccurately, especially because a huge portion of how your credit score is calculated is based on your credit utilization, and that is how much money you've used on a card. So if you have $1,000 credit line and you owe $300, but they're saying that your credit limit is $500, you're going to get a lot lower of a credit score versus having that open line with $1,000 credit limit. So you want to make sure that every piece of that trade line is accurate. And like we mentioned before, the way to do that is by checking your credit report often, recommended once a year, or if you can do it more often with another resource, definitely do that, but once a year is recommended. Next slide.
All right, we're going to cover your FICO scores, your credit scores. A company called Fair Isaac and Company developed what is known as a FICO score. Or people hear this is what's your credit score, that's what they're talking about. It goes from a low 300 up to a high 850. The higher the score, the better, because it means that you're less of a risk to a lender when you're asking to borrow money. And it also means you're handling your credit well. I was in the, I was a loan officer for a number of years. I looked at thousands of credit reports. And I'll say the first thing we looked at was the credit score, because it told us so much. That credit score told us what is the likelihood that this loan will be approved and how much interest is a person going to pay for this loan. Now, all three credit bureaus have credit scores, but they will not always be the same. So it's because of how they calculate the information, store it, put it all together. But they're going to be close. So you'll have one credit bureau, your score might be 820. Another credit bureau, your score might be 800. The other one might be 790. Now, they'll use your entire credit report to base a decision on approving a loan, but your credit score is what they use to price the loan. And they will always use the lowest of the three scores to price your loan. That's why it's so important that you keep your credit in good standing, make your payments on time every month, so that even that lowest score will still be a really good score. Now let's go into what actually makes up your credit score. The most important category, it accounts for 35% of your score, is your payment history, your on-time monthly payments. Regular on-time monthly payments is what gradually builds up your score and gives you that overall great credit. Think of it as a staircase. Each time you make that monthly on-time payment, it's building up that staircase to a really good score. If you have delinquents, if they're reporting like 30 days late, 60 days late, it dramatically drops your score. And it's like taking 5 steps back for the 2 you're trying to gain. So it's so important to keep those payments on time. Amount you owe is 30% of your credit score. So you don't want to carry high balances on your credit lines. So if you have a credit card and let's say it's a $10,000 limit and you always have a balance of around 9,000, this can prevent you from getting a higher credit score. Even if you've never been late on a payment, you've never missed a payment. If you're always at that limit, it looks like you're living beyond your means. You may not be able to handle your credit. And if something unforeseen happens, you're gonna have to apply for even more debt to help you get through whatever's going on. So the good rule of thumb is to keep your balances at about 50% of what your credit limit is. So do that whenever you can. Length of credit history is 15% of your score. The longer you're in the credit history, the better it is for your credit score, because lenders want to see a good, healthy, long history when they pull your credit. So let's say you open a credit card 20 years ago and you've got other credit since then. But when a lender pulls your credit history will go back 20 years. They'll see that you've had great credit for that whole length of time. Now, they're not going to see 20 years worth of payments on that one card. Typically on your credit report, they'll see the last 24 months of reported on-time payments. But it will show when that account was opened. So they'll see you've been in the credit bureau for 20 years. New credit counts as 10% of your score. Now, this counts, Crystal talked about this a little bit. And remember, I said we're going to repeat a few things because it's important. Here's where it is. If you are applying for more credit than you need, too much credit, this will negatively affect your credit score. If you have too many credit inquiries within a short amount of time, like Crystal mentioned, you go into a store and they offer you a card for 20% discount. Oh, I take that. You get a pre-approved card in the mail and you go, oh, I like the way this card looks. You take that. You go into your credit union, they go, hey, we got this great reward program on this card. Oh, I want that. You take that. All of those count as new credit and inquiries on your credit report, and they can all negatively affect your credit score. A rule of thumb here is to only apply for the credit you actually need and you are going to use. Now, there is an exception, and Crystal touched on this as well, and that's that 14-day window if you're shopping for a car or a mortgage, because lenders know that you're going to shop for the best rate. When you go to the first car dealership, they're not going to tell you how much of a rate you're going to get until they pull your credit. So you do that. But then you go to 6 other car dealerships. Those other 6 car dealerships, when they pull your credit, that does not count against your credit score within that 14-day window. Same with a mortgage. You can shop for the best rate in a short amount of time, and only the first inquiry will count on your credit, and the others within that 14-day period will not affect your credit score. And let's see here. Employment, types of credit used. This is 10% of your credit score. And what this means is when a lender is pulling your credit and they're thinking about giving you a loan, they want to see a good, healthy credit report, which includes various types of debt. They want to see that you can handle the responsibilities that come with carrying different types of debt load, which they don't want to see just a credit card. They want to see a personal loan, a mortgage, maybe a student loan, and a car loan, and of course credit cards. They want to see a mixture of all of that on your credit report, and that helps your credit score as well. And we'll go to the next slide. So you want to improve your credit score. You want it to be higher than it is. What can you do to improve it? You're going to hear some of the stuff again, but this is so important to improving your score. The number one tool for improving your credit score is those regular on-time monthly payments. Nothing builds your credit faster than regular on-time monthly payments. Those are the building blocks that actually build to a high credit score. The next tool is to reduce your debt load. Again, you don't want to carry balances too close to the limit, especially if you're applying for more credit. If somebody looks at your credit report and they see that, well, you've got a $10,000 credit card and you're always owing $9,000 on it, and you want to borrow more money, can you handle the more money that you're asking for? So try to keep those balances at 50%. It will not negatively affect your credit. And also it gives more room for a lender to approve another loan for you. You want to limit open accounts. The credit bureaus recommend you should have between 2 to 4 unsecured lines of credit. Okay, what's an unsecured line of credit? It's something that's not held by any collateral, which is basically department store cards and credit cards. So you go to Kohl's and you get a card from them. You go to Nordstrom's, you get a card from them. Okay, there's 2 unsecured lines of credit right there. You get a credit card from your bank, you get one from your credit union. You now have 4 unsecured lines of credit. You really don't want to have more than that. And you want to make sure that those are in good standing, payments made every month, balances at about 50%. That's what creates a good, healthy credit report. If you have 5, 6, 7, 8, and I'm not kidding, I've seen up to 14 credit cards on one credit report. This can make it almost impossible to get approved for a major loan like a mortgage. And let's say that you owe almost nothing on those credit cards. Let's say that you owe like $10 total. It can still prevent you from getting a new loan because you have the capacity to charge all of those up overnight. And now you're extremely in debt. And so lenders look at that. They look at what is your potential? How much can you charge up? And can you get yourself in trouble if we add more to this debt load? So you're going to want to start closing some of those out. But it's important that you keep your oldest accounts open. And the reason for that, remember you got that account we talked about, you opened it 20 years ago, and you've had all these other accounts, but you got too many. If you close out that one that you opened 20 years ago, your credit bureau no longer goes back 20 years when they pull your credit report. If you just started adding to your credit a year ago, and the next oldest trade line happens a year, when they pull your credit, it only goes back a year. And that may not give a lender enough time information to make a good decision for approving a loan. So keep your oldest accounts in good standing and keep them open. And not too many accounts, try to keep around 4. Avoid maxing out, we talked about that. And let's see, diversify the types of accounts you have. Again, a lender wants to see that you can handle the responsibilities that come with various debt loads, personal loans, student loans, mortgages, car payments, credit cards. A mixture of all that makes a good, healthy credit report. And with time, a good long history helps build your credit report. All right, and now we will go to, limit number of applications. Again, we talked about that. You don't want to have too many inquiries on your credit report in a short amount of time. That can negatively affect your credit score. All right, the next slide. Thank you. How long will all this information stay on your credit report? Well, the good thing is good credit can stay on there indefinitely, which you want. You want every time you make on-time payments, you paid off a loan, you want people to see that. That builds good credit. Now, if you have bumps on your credit, if you have some negative information, you've had 30 days past due, 60-day past dues, you've had some collection items on there, you had a Chapter 13 bankruptcy on there, you had a judgment against you on there. Those things are going to stay on your credit report for 7 years. And there is nothing you can do to remove accurate negative information. Only time can remove that. But you do want to make sure you're looking at your credit report every year. And if you see that you've had late payments and it was more than 7 years ago, or a collection, or a judgment, or a Chapter 13 bankruptcy, and it's more than 7 years and it's still showing on your credit report, they need to remove that. But if it's accurate and it's still within that 7 years, they're not going to. A Chapter 7 bankruptcy will stay on your credit report for 10 years. So it works just like the 7, but this one's for 10. And collections, we already talked about that. They're going to be on there for 7 years, and you want to get them to remove that as well. All right, and now we will go to the next slide. And let's see. This one, I believe, is Crystal.
I want to add just one more cautionary tip on how to raise your credit score. So I know a lot of times what we've seen in the credit union is, you know, somebody had bad credit, they want to build their score up, so they want to do a secured loan. Secured loan is where you put up the cash. We will typically put it like in a savings account, and then we can either issue a credit card or just a loan that you pay on monthly for, typically a 1 year 1 year term for that credit, secured credit, secured loan. So what we've seen is when people get the secured loan, they think, okay, well, instead of waiting a year to pay it off, I want to get that higher credit score now. I'm going to pay it off in 2 months. But as Craig mentioned, the longer history that you have, the better score that you're going to build. When you get a new loan added to your credit file, it'll probably take about a month before it even shows up on your credit report. So if you pay it off within 2 months' time, you're not going to get the benefits that you would receive if you took your time and paid monthly payments every month for a full year. So secured credit cards, secured loans are great ways to increase your credit score. If you're looking to do that, just make sure that if you're doing the loan option, that you are doing the full term to get the full benefits of that credit scoring. So now, one more reminder, we are going over a lot of like figures and percentages and things like that. So just wanted to remind you all that all of this information is in the handouts that were emailed to you, and they can go into even further depth with tips and things like that to help you improve your scores and kind of understand how that credit system works out. So don't worry if you've missed anything or didn't quite understand something, you can always go back and reference that in those handouts. So correcting inaccuracies. Now this can be easily done one of 3 ways. So if you, let's say you pull up your credit report and you notice that the open date is inaccurate. One way to fix that is to fill out a dispute form on the website of the credit bureau that's reporting the inaccurate information. So maybe not all 3 credit bureaus are reporting it inaccurate. Maybe it's just TransUnion. So you can just contact that credit bureau. Again, we have that address referenced on page 1 of the handout. Contact them that way, and then on. Another way is that you can send mail certified. So maybe you don't do things over the internet. You can actually mail things. Just make sure you keep copies of everything that gets sent out for your proof and verification of what was going out to the bureau. And then the third way, if for whatever reason the dispute fails, you can send over a 100-word statement giving a little bit more explanation of, you know, dates and actual events that happened that looks like it caused the inaccuracy on there. We do recommend report and correct an inaccuracy on your credit report to fill it out on the website versus the mail option. Going through the website is a lot faster. They've got it down to a science now. Basically, it's a fillable thing. So name, address, you know, what item is being reported inaccurately, what you know, what's the discrepancy there, and you just fill it out and you're going to get a really fast response. They have up to 30 days to respond to you before they have to actually make an adjustment on the credit report. A response much sooner than that, but they have up to 30 days. Next slide. One thing you all want to be aware of is credit repair agencies that promise to help you repair your credit. I'm pretty sure you've seen them on TV, on social media, billboards, things like that. You know, companies offering to repair your credit for only $300, $500, whatever it may be, or for a monthly charge. Most of the things that the credit repair agency does, you can do it for yourself for free. Like we said, pulling your credit report, you can do that for free once per year. If you do that, annualcreditreport.com, you can pull all 3 credit bureaus. Again, that is for free as well. Making a dispute online, that's for free as well. It just takes a little bit of time. So you want to make sure if you do use any of these, you take some caution with it. We have seen some companies that promise these credit repairs, and the way that they are able to do that is by engaging in illegal activities with your name. Some that we've seen, they've actually submitted request for a whole new social security number for somebody. So that is illegal. There is no reset on the credit that you have earned. What's on your social security number is the credit that should be on there. If you need to make adjustments, like we said, it'll take some time, but you can do it. You're not allowed to legally have two social security numbers. So take the steps yourself. Dispute what's inaccurate or outdated on the information that's being reported. You can do it yourself for free. Be very leery of companies claiming to do it at a cost. Next slide. And then the next part is identity theft. Identity theft is on the rise. There are scammers and fraudsters who are looking for any way and any opportunity to steal people's identity. One way to prevent it is by, again, checking your credit report regularly, protecting your information. So taking steps like not carrying your social security card in your wallet. If you lose your wallet, then the fraudster now has access to your driver's license and your social security card, which really is all that they need to open up a new credit card, apply for rent for a new home, open up power, things like that. With those two items, that's all that they need to do it. And most with today's technology, most things can be done from a cell phone or a laptop very easily. So you want to make sure that you are not giving them access to these things if you were to to get into a situation where you lost a wallet or something, purse. You also want to shred anything with your account numbers on it. So you get your monthly statements, make sure that you are shredding those and not just throwing those out in the trash, forgetting them, on an office desk or something, maybe at work. Make sure those items are not left accessible to people who are not supposed to be having access to those things of information. Because again, that's something that could easily be switched over. Changing, getting access to that account number. Somebody could easily, request a cash advance or something, give an account number and say, I need a cash advance to this account number, blah, 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 blah. They have all the information that they need to do that. So you want to make sure you don't leave those openly available. Another thing that we advise against is leaving things like mail in your car. I know kind of like the regular thing that we hear is, okay, don't leave your valuables like a laptop or your packages from shopping, don't leave those things. But a lot of times fraudsters, what they will look for is mail that has been left in there because they have access to all of your information. So don't leave your mail in your cars as well. Review your credit reports, check for inaccuracies, and then monitor your regular statements carefully and make sure that even your financial institution is reporting accurate information. Did they receive the payment that you sent in last month? Make sure you're getting credit for those things so that they can later report back to your credit report and give you a better score for an on-time payment. Next slide.
It'd help if I unmute myself. So the damage has happened. You find out that you've been a victim of identity theft. There's been fraud on your credit. What do you do? Now, I can speak about this from personal experience. I had a call one day and it was from a collection agent, and he called and asked me, he called me Jimmy, which is my first name. I always go by Craig. So if somebody calls me Jimmy, they're trying to sell me something. And he asked for Jimmy, and I said, this is him. And he says, I need to verify your social security number. I said, I'm not giving you that. He goes, no, I'm going to give it to you. And he gave me my social security number. And I said, okay, well, you got my attention. And the long story short is somebody had opened a phone line in an apartment in my name using my identity. And of course, they didn't pay the bill, and it went to collections. And before I was done, I had a notebook this thick of everybody that I had to deal with to get that fixed, police departments, FCC, all that. So my first recommendation on this is if you find you've been a victim of identity theft, get a good thick notebook and write down every name of the person, anybody you have to talk to, their titles, their contact, everything that was said, because you're going to need all of that later. You're going to have to file police reports. You're going to have to file them probably in multiple jurisdictions. So you pull your credit report and you see there's a Kohl's account on there. It's not yours. You never had a Kohl's account, and it's 30, 60, 90 days delinquent. Remember, bad guys aren't going to make the payments on time every month, so it is going to show delinquent. So you're going to have to file a police report. Now, what if they did that in Houston, Texas? You may have to file a police report in that jurisdiction. You're going to contact immediately all 3 credit bureaus. Let them know you've been a victim of identity theft. Ask them to put a fraud alert on your credit. What this does, this is for 7 years. Nobody can issue you new credit without express permission to do so. So the way that would work is you've been on there you put it on there for 7 years. It's a couple of years down the road. You need a new loan. You'll have to call the credit bureaus and say, I'm giving bank XYZ permission to pull my credit and issue me new credit. You're going to contact the creditors. So if Kohl's shows up on your credit report, it's delinquent, you don't have a Kohl's account, you will need to contact Kohl's and go through their fraud department and take care of it that way. You want to monitor all of your accounts. So you get your account, you get your credit report, and Kohl's is the only thing on there that's wrong. And it's not yours, it's fraud. And all your other accounts look great. It's a good idea to contact the other creditors, let them know you're a victim of identity theft, and get new account numbers and new cards. And above all else, change all your passwords. You want to do that. You want to review your credit quarterly. Now, we've talked about this several times. You can get a free copy of your credit report every year. Unless you've been a victim of identity theft or you have fraud on your credit, you can then get a copy from all the credit bureaus quarterly. And you should definitely do that and look for everything we talked about. Make sure the information is yours and not somebody else's. It's accurate, it's updated, and there's no other fraud going on there. There are other organizations that you're going to have to contact. So if they got a driver's license in your name, you're going to have to go through the fraud department of DMV. If they got a social security number with your name, you're going to have to go through the fraud department of the Social Security Administration. If other financial institutions, like if they get a hold of and they're doing something with your checking account, you're going to contact your financial institution. It's recommended that those accounts you have are closed and new account numbers are given to you, new cards with new numbers, new passwords, and all of that. This is not like closing out your oldest trade line on your credit report. This doesn't affect your credit in that way, getting new account numbers from your financial institution. And there's a couple of other reporting agencies that you may want to be aware of. Wait, there's something else I wanted to talk about real quick. Hang on here. Something that we touched on earlier, but it's also, I'll bring it up before we're done. Let me just continue with this. A couple of other reporting agencies you want to talk about. Check systems is one. This is used by financial institutions to kind of protect each other from somebody who's bouncing checks or leaving banks or credit unions and not, leaving them owing them money. So if you are on check systems, you had a bank and bank XYZ, you bounced a couple of checks, they will report you to check systems. You go to your credit union, you want to open an account there, they see you're on check systems. They may not open that checking account. The only people that can remove you from check systems is whoever put you on there. So you'll have to go back to the original source. This would be Bank XYZ, and make good on those bounced checks and then ask them to remove you from check systems. Now, let's say that you bounced several checks with that bank. You knew you did. You've already paid them off. You owe them no money, but they still reported you to check systems. They do not have to remove you from check systems, even though you've paid that off. So you need to go back to them. And if they will not remove you from check systems, at least have them give you a letter that shows you owe them no money. That was all taken care of. You could then go to your credit union and say, I know I'm on check systems, but I paid all that off. Here's a letter showing I owe them nothing. And in most cases, that will be enough to help get you a new account. Another reporting agency is called the National Tenant Network. And this is what landlords use to protect each other. So if you've ever been evicted or you broke a lease and you left owing money, or there was some damage in your security deposit didn't cover it, they can report you to the National Tenant Network. And this can seriously hamper your ability to rent a new place. Again, the only people that can remove you from this are the people who put you on it. But you can, and you have the right as a consumer to contact these reporting agencies and ask if you're on there. And if you are, they have to tell you who reported you. Then you can go to whoever reported you and work it out and see if you can get yourself removed from that list. At the very least, you can provide your side of the story in a brief statement. It's usually 100 words or less. And you can give that to the people, or you can actually give it to the National Tenant Network, and they will put that on your record. So if you've been evicted and a new landlord sees that, they will also see your side of the story. They'll see that what you get with the claim you filled out, they'll see that as well. And that sometimes can also help. There was one other thing that I wanted to mention before I turn it over for closing thoughts to Crystal is, I touched upon earlier, if you're trying to improve your credit or reestablish your credit, there's another thing that you can do. So let's say you're brand new to credit. You've never had a loan in your life. You need to get a car loan, but nobody will approve you because you have no credit to base it on. Or you've damaged your credit and nobody's willing to take a risk on you, so you can't get that car loan. you can ask somebody you know who has good credit to be a co-signer. Now, what they'll do, they'll price the loan based on you. So you're going to pay a higher rate if your credit's been damaged or you have no credit at all. But they're going to base the approval of the loan on the strength of your co-signer. So that loan can get approved. And you want to be very, very careful with these loans, because if you have late payments or you don't satisfy that loan, it doesn't just affect your credit, it affects the credit of the co-signer. And the co-signer is already doing you a favor by co-signing for this loan. You do not want to do the disservice of damaging their credit. So you want to be very careful and make sure those payments are made on time every month. Sorry, I had to bring that up at the end. It was somewhere in my notes and I think I lost it there. So thank you guys very much for logging in. Crystal's got some final thoughts, and then we'll be happy to address any questions that this material didn't cover.
Yeah, and I think if we can advance 2 slides. Yes. So this is our final thought. Basically, we're going to say it again. Pull your credit report at least once a year at a minimum. Check for inaccuracies and stay up to date with anything that's being reported on your credit bureau to make sure that you're getting credit for your on-time payments. If you do have any late payments, you know, the only way to overcome that is by more on-time payments, and then just keeping your balances like credit limits below 30%, if at all possible at 1%, which can be a little bit hard, but that's for maximum results on your credit score. Next slide. And then I hope that we've answered all of your questions that you came here tonight wanting to get answered, but if not, we will open it up if there are any questions from any of you. If you had anything more specific that we didn't touch on or you want us to dive a little deeper on, we're open to answer those for you.
Yes, you're free to unmute yourself, or you can put it in the chat. I'm going to kick us off with a couple of questions, if that helps. So first, how frequent is it for an employer to pull a prospective hire's credit? How often does that happen?
I think it depends on the company. So I know for Clark County Credit Union, and I can only speak for Clark County Credit Union, we do not pull credit for prospective employees. We look at a whole lot of other things, but credit is not one of them. But I've worked at other ones where they do an annual credit check to make sure all employees are up to par. And that's because we were at a financial institution. So 2 different financial institutions, 2 different ways of doing, you know, credit reports. So I don't know about you, Craig, what experience do you have?
I will say that I think would be more common for an employer to pull your credit prior to hiring you. If that's one of the things they're looking to see if there's any reason why they shouldn't hire you, you will sign a waiver. And if they're going to pull credit on you down the road, or if it's something they plan on doing, that's going to need to be in the waiver you sign. You still need to give them permission to pull your credit down the road. They shouldn't be pulling it just whenever they want. So that should be part of the waiver that you sign.
Yeah, so that, yeah, when you get hired, read the fine details to see if that is something that they will be doing periodically. I have seen in the financial industry, again, is that they do offer support systems, so that if you are struggling financially, there are counselors that you can usually reach out to, say, hey, you know, I'm having a hard time paying my rent. You know, all of these things are kind of snowballing. Can you help me come up with a plan so that it doesn't affect my credit score and it doesn't affect my employment with, you know, this company? So check into those things as well.
Oh, one more thing on that as well. If you pull your own credit, it does not affect your credit score. If an employer pulls your credit, it does not affect your credit score. So if they're asking to pull your credit, don't worry about it being a negative inquiry. It does not count against your credit.
Great, great. My second question is, if you have a minor underneath your roof that is approaching 18 or 21, what is the best way to help them begin to establish their own credit?
Small. So they do need to start as early as they can to build that long credit. I got my first credit card when I was 18, had a $500 limit. I still have that exact same account. It's got a higher limit, but I have that exact same account. So my credit history goes all the way back to 1982. So it's okay to start them with a reasonable credit card when they're 18, but you really want to make sure that they understand the implications of getting into trouble with that. So you want to educate them that they want to keep that balance 30%, no more than 50%. Keep it in those ranges. Monthly on-time payments every month. That will help to build their credit. And most young people around that age need a co-signer to help them get a car loan. But if they're starting to build their credit at 18 and they do a good job with that, then by the time they hit 21, they might be able to get the car loan all on their own with good credit.
And if they are, I'm sorry, Crystal, go ahead.
No, I was just going to say, I think a lot of times people think that they have to automatically start out with the co-signer, but at least, in my experience, they don't need a co-signer. If they have a job they've been on for at least a year or 6 months, they can qualify for a small credit card. So like Craig started with the 500, that's a typical starting credit limit for a beginner's credit card. On-time payments, keeping the utilization low, those will help to build that starting credit score, so that when they're ready to get that first auto loan, hopefully they can do it on their own. A lot of times places will have like a first time buyer program. They might have to put like a little bit more down, maybe 10%. For the auto loan, show they're really invested in that loan. They might not need it. But in other cases, maybe they don't have time or the ability to come up with a 10% down, then they can, reach out to a co-sign or something like that. But I think credit cards or like a line of credit is a great way to start credit. You just really need to explain that the money is not theirs, even though it's a $500 limit. This is just to show your ability to repay. So you really only want to use it for maybe gas, and just pay that bill off monthly.
And if they are,
I was going to say one other thing on this, especially when you're 18, just going to college, you're going to get hit with a lot of people wanting you to take credit cards out with them. And this is where a lot of people get in trouble early. They start taking out every card that people offer them. And before they know it, they're deep in debt. They can't handle it. It can mess up their credit. So it's really important to educate them to keep 1 to 2 cards. 2 cards is a great balance for an emergency. Keep a small balance on one, keep the other for an emergency, and make your payments on time every month.
And does establishing them as a authorized user on your account, does that help their credit, or does it not impact them in any way?
It does. It can. I'm sorry. Yeah, it does. It depends on how it's set up. If they're a co-signer on a loan, yes, it will positively affect their credit. If they're just on a checking account with you, it's not going to affect their credit, but they're standing within that financial institution.
One thing that I would say to be cautious on this, and I am not a fan of this practice, only because I've seen it where the parent who has more of a credit history, they're more mature, maybe they have a $20,000 credit limit, and then they add their 18-year-old to that, loan. Now the child, the 18-year-old, wants to go and apply for their own credit card on their own. It's been a year or whatever it is, they've got a score built up. They get denied because they are showing that they've got available unsecured debt of $20,000. But really it's the parent who has a much higher income who is able to afford that unsecured amount. But now they're showing that they're responsible for that limit. And then same thing with utilization and things like that. If the parent is not using their credit card wisely under the 30%, it's going to affect the child as well. So I like to always steer people away from that option, but I know I hear that often.
Mr. Anderson, I believe you had, okay. Did you have a question, Mr. Anderson?
Yes, I did. Hi guys, sorry.
Hello.
Keep your camera off for now, but essentially I was wondering, how do you guys feel about creditkarma.com and those places? What is your guys' input on those?
Do you want to start, Craig, or you want me to?
I'm sorry, what was the name of the company again?
Oh, like Credit Karma, ones that you like are, they'll do inquiries periodically, monthly, like they're supposed to be pulling soft credit, giving you information so you can actually like view your credit essentially almost monthly.
So they're basically charging you a fee to pull your credit, to review it, to see if there's any.
I use Credit Karma, and I am a fan of Credit Karma, the free version.
Oh, you talk about it. Talk about it.
So yeah, Credit Karma, they I signed up for a free credit monitoring, and basically anytime there's a change on my credit report, if there's
Okay.
a new loan that's been added, a loan that's been paid off, it'll tell me what's being reported on my credit report as it's happening pretty much. So I like getting those little notifications, and then I can verify and check, okay, was that me or was that not me? And I almost had a fraud incident a few years back that Credit Karma caught. There was somebody trying to apply for credit for an auto loan in some state, like in the Midwest, and I found out about it through the Credit Karma. The one thing, though, that I would advise people is that Credit Karma gives you a credit score. That is not your FICO score. So it'll give you a score, but it's based off of their own calculations for their own systems. That's not the same score that's going to qualify you for a loan when you go to your local credit union or your bank. So information that is reported, that's great. It'll also give you recommendations for credit cards and things. I don't typically go for those just because working at the credit union, I know credit unions generally have better interest rates and products in general. But it is nice to have that reminder that, hey, you're under 10% of your credit utilization, you can qualify for this. So it gives you those little pep talks, and it gives you different articles and things like that. So I have found that I like it, but I don't pay any money for it.
Yeah, no, I completely agree with you, and thank you. That's a great evaluation on it. Another thing, I'm sorry, I don't mean to take up too much time, but I wanted one more question. Another thing I noticed is that when I purchase my homes, it usually takes like 7 to 8, or actually like 8 to 12 months for it to actually get to my credit. Is that normal for a large purchase? Because I've noticed that on 3 of the houses I purchased, like it won't hit me and when it finally gets off, like I'm just barely seeing my house, or I'm still getting stuff for my house right now that I had sold in August.
I haven't seen anything like that. I don't know about you, Craig.
I think what it is, I think it has to do with the lender. And I know that we had a house payment once, and they just weren't reporting it. And I think that's what you're finding it. Like how much we had to contact them and say, hey, please start reporting this to my credit report. And they, oh yeah, we're backed up, but they started reporting it. But yeah, that can happen where it just takes them forever to get it. But you can call them and say, hey, I really want you to report this to my credit report. Those monthly payments count. I want that shown on there. Because it's a matter of them doing it.
Makes sense. I was about to say that it usually catches up, and then all of a sudden my credit score will just shoot up, and I'm like, whoa, this is nuts. Because like it goes down to like 650. I'm like, what is going on here? And then all of a sudden it shoots up to 750, and I'm like, this is weird. So anyway,
talking about credit scores shooting up, I just want to mention this real quick because this has to do with collection items. When I got that call that I had a collection item, I hadn't pulled my credit recently. Now I knew my credit was in the 800s, 800 something. That one collection for that one telephone dropped my score to 620. One collection. And I've never missed a payment on anything. And I've been in the bureau for 20 years at that point, So yeah, so important that you stay on top of your credit. And for you, Brian, contact those mortgage lenders and let them know, hey, start reporting that. I need that reported.
Great. Thank you. You guys have been amazing. So thank you so much. And thank you for putting this together, Vanessa. I appreciate it.
My pleasure. Are there any other questions?
All right. Well, if anyone does have any questions that come up, later tonight, you're getting ready for bed and you think of something, our contact information is in the handout that Vanessa sent out. So feel free to reach out to us. We're here as a resource. Like we said, in the introductions, financial education is a passion for both myself and Craig. So thank you, Vanessa and Rosamond, for setting this
Vanessa, thank you for monitoring and doing the, I just want to say one more thing, that's something that we have at the credit union that really helps our members. It's called bonus checking. And I won't go into it deeply, but it has complete identity theft protection as part of it. So if somebody opens a phishing license in your name, you're going to know about it. Somebody commits a crime using your ID, you're going to know about it. If you ever discover you've been a victim of identity theft, you don't have to worry about what do I do next. A fraud expert is assigned to you and will walk you from beginning to end through all the police procedures, any affidavits you have to fill out. If you have to spend any of your own money to recover your identity, you recoup that up to $10,000. This doesn't just apply to you. This applies to every single family member living in your household, and they do not even have to be on the account. They get the same exact identity theft protection you do. So that's something you can check out on our website as well. That's my only plug for the credit union tonight.
Good night, everybody.
Good night,
Thank you
everybody.
guys.
Have a
It was
wonderful evening.
amazing.
Thank you,
Bye-bye.
everybody. Stay well.
Thank you.
Good night.
Everybody stay well.